SPDas, the trading floor is yours.
Okay, thank you once again, Igor, and once again, welcome back to the London session. It is what like 5 a.m., 4 past 5 a.m., 4 minutes past 5 a.m. Eastern now, and okay, price action is not moving that great, and it was expected not to do so as well. We are just about three and a half hours away from a good amount of noise in come in form of NFPs. So there could be some price movement against our trades as well for a moment. Let's see how it's shaping up. Right now, if you look at the Euro USD hourly chart, I mean the counts are here presented. An impulse wave higher followed by a corrective wave zigzag lower. And I've kept this trend line intentionally because it has tested the backside of the trend line, which acts as a support. Now, it doesn't really guarantee that price action is going to rally right from here. It can actually make Gartley, you know what it means. Let's say what it means. Let's say structure would be an A, B, and C. Hit the backside of the trend line again, form a channel, and then pick it up from there. This is quite possible. All right. So let's keep ourselves aware about it. Not be surprised. And if a Gartley does form, then it's always good to draw a channel line as well. I like drawing lines and being with them all the time. They're great tools to help us understand which kind of zone we are, and that's really helpful. So if we have a Gartley and we do this channel, the moment it breaks out of this channel into the buy zone again, it's a double confirmation that euro has now seriously bottomed out with a double touch on the backside of the trend line and also break about the channel which it's created. Right. If it pushes through this uh, right away, then it's fine. But if it doesn't, then it's good to remain keep this channel as it is. All right. That's the wave story. And on the trading point of view, just in case if you're just joining right now, I mean, and if you have not yet taken any position, all right, you might want to do it partially now, and then partially somewhere around 320 zone. The reason why I'm saying is there is a chance of a Gartley forming. So you don't want to get fully at a high price. So I'm suggesting a partial buy, and the remaining, giving yourself a space to buy remaining around 1.0330 or 20. That would be a good level to enter, and the stop loss goes unchanged 1.0200 as well. And the targets are also unchanged 1.0750 as we have discussed earlier. So let's see how the price action is now picking up or shaping up while we quickly approach or just a few hours away from the NFPs. All right, the dollar index now quite a bit on the same lines for the dollar index as well. A Gartley structure is quite possible. So what I'm going to do is I'm going to keep that arrow as it is, and also let's do the trend lines here. That was the counter trend line. We are completely into the sell zone of the counter trend line, and if Gartley is formed, then prices would rally a bit. It would form a zigzag structure and then drive down lower again. All right, so that will be another channel. Let me remove this channel for now. We don't want to keep so much stuff on the graph maybe a one or two Fibonacci ratios. I don't think we need this as well. Okay, counts are always important, wave counts, to keep us aware about where we stand. So I always like keeping them. I mean, if it's your preference, you would also want to do so. But as far as the other things are concerned, I don't put too many indicators or I mean, I've seen people, many traders putting so many indicators that the charts are not seen and only the indicators are highlighted. So finally, if this channel is formed and we'll wait for the break of this channel line, I'm doing it in an advanced anticipated move for the dollar index to push a bit higher and then lower again. All right, this is an anticipated move and an anticipated trend line. It's not exactly what we propose. But when the noise comes, you really don't get the chance to trade. So what I suggest, if you're not yet traded, the trading point of view, you might want to have a limit order in place at around 1.108.4850 or so. Better be around the safer side, 108.30 or so, 30-40 zone, with a stop around 109.80. That would be a good one. Because really speaking, if there would be so much of slippage and so much of quick price action, it won't be possible for us to trade at that time. So right now we have 107.66 already, and if it continues to drop lower, we are well poised to reach around 106.40 going forward. You know what? Dollar index is seriously preparing itself for a large degree reversal, a bearish reversal. And it's good that we've gotten in dollar index right from the beginning. I mean, I remember 13th or 14th of Jan when we were here in one of the sessions, I think New York or London, and we took aggressive shots at 110. It was not recommended for you to take so, but I did take 110 as an aggressive shot. The stop around 110.30, and that is still holding up. Right. So that's the story in the dollar index. Which one? Okay. So there are two Fibonacci ratios. Let's remove one of them. We are ourselves here. We don't want to create noise ourselves on the charts. That looks neat now. Alright, so bottom line remains, for now, technically the bottom line remains at 110.20. But it's okay, its price action has already moved around 80% of the entire corrective wave. So now it's okay to say that the bottom line remains around 109.80 for bears to remain in control. And anything you sell higher, and stop around 109.80 would be good to sustain on the downside going forward. All right, so let's pick up the next one. Always very important, gold. Okay, gold is as we spoke even last time. It is either forming, it is just retracing or wanting to print a shallow high before reversing. And I would welcome that move if it is printing or wanting to print that shallow high, because not because I want to get, we want to get on a higher side on the shorts triggered, but we want to see that divergence scenario. This is something a very strong confirmation of bears coming back strongly. A bearish divergence, a new high accompanied by bearish divergence would really do the trick for us. Having said that, the trade setup is absolutely, we are still in the trade, partially short from 75, 28.75 that is, and this is the last wave which we are considering as the last one actually, but who knows it is yet complete or not. That was third wave, extended third wave again, and wave four. I can really count five here after this. That the third five waves. So if this wave structure is complete, then we are good to go. I mean, gold is good to resume uh, its downtrend. I would not say trend, but because the trend is up actually. The larger degree trend is up. I don't want to create confusion here, so let me draw the larger degree counts as well. We're just trying to play around wave 4, which could be turning out as an expanded flat. But for it to turn out as an expanded flat, it has to really reverse very sharply, either from here or possibly making a new high around 28, 88, 90. Otherwise, the fifth wave is poised to go around the 3150 levels. This is the larger degree count or larger degree move for gold. And if I bring up the extensions for the next wave, 2500 is what we are expecting as at least a minimum drop towards 2500. All right, 3200 is exactly somewhere around 3200 where the fifth wave would actually go and terminate. All right, sir. So this is what is expected. 1, 2, 3, expanded flat wave 4. This expanded flat wave 4, we are somewhere here in somewhere near the termination point of termination of wave B, minute degree. All right, now we are still waiting for a price action confirmation, and to be more objective on where the price action would really confirm is uh, a break below 2810 or at least towards 2830. If it were to drop towards 2830, that would really confirm one thing, that it's not a wave 4 anymore, uh, because wave 4 would not enter the territory of wave 1, but it just remained a bit shy around 38, 2834. So a push below that low today can really do the trick. The daily chart suggests the next move in gold, if price action holds below 20, sorry, 2882, and the next targets could be 2804 and 2757. Here's what we are expecting. All right. So partially shorts are active and will remain partially short in gold. We will also add or recommend to add around the 28, 88, 90 if price action triggers there. The stop around 28.99. The potential target flashing up on your screens 2804 and 2757 respectively. All right, let's have a quick view at dollar index and we'll come back to the coins. Not the dollar index, but the Dow Jones, sorry. Okay, larger degree picture first. Now the story we all know almost began 2 hours, not 2 hours, but at least 2 years back, around October, September 2022. We are just in February 25, so just about 2 years now. We can subdivide into five waves. Wave 1, expanded flat. Wave 2, wave 3, a potential triangle. Wave 4, and an extended wave 5 up there. And I've shown the subdivisions of wave 5, which is also kind of five waves. Wave 1, 2. So wave 4 was a triangle. I think I can put this here as well. Right, so it's wave 1. August drop was the second wave. The first week of August 2024 collapse was the second wave. And then we can count five waves here. 1, 2, 3, 3, 4, and 5. That is minute at 3. And we've adjusted the counts here. Actually, it was wave 4 earlier and 5. But I think we've almost taken it out, or just 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 below that. Whatever the case, it's almost taken it out. So I've adjusted the wave 4 to be at 41, and another 5 waves rally, that is wave 5. So it is almost close to completing the 5 waves at minor degree, that is uh, the numeric 5. Also 5 waves at a minute degree, the Roman 5. Then we step down further, 5 waves at a minute degree, which I have not drawn here or not labeled. It will be numeric again, but it will be brackets, not circle. And there would be one more 5 over here, like bracket 5, which would be the intermediate wave 5. So at least 4 degrees of 5 waves are terminating, either terminated or just about to terminate around the 44,000 mark. It doesn't make any logical sense to go and buy, no matter what economic or fundamental factors would come out. The charts are clearly telling us a story that it's all diverging. That was wave. That was the peak. In fact, the peak, the highest point is here, which equated around July 2024, and thereafter there is no RSI peak at all. All right, so we've got to keep this in mind, very clear. This in the Dow Jones, we have initiated some shorts around 44,000 aggressively. The stop above 45,600. But SPX 500 we have not initiated, but we are still waiting to do so. Now the bottom line for this for this setup to confirm we are moving or beginning to move on the south side would be, without any further speculation, we would say, okay, simply put, a break below 49, 43, 800, 900, that low would be a certain confirmation of the bears being back in control very strongly. So be watchful. That's what we are proposing here. Be watchful in the Dow Jones. Be watchful in SPX if you're not yet traded. But going long at this price, or even thinking about initiating longs, can be a bit dangerous, because it could be a serious bull trap. Having said that, I'll bring up the daily chart for SPX as well. The structure is slightly different than the Dow Jones, but this entire activity could be a sideways wave 4. But if you look at the primary wave counts, then okay, I'm just Okay, that was wave 4 on the primary level. August drop. And then we've got wave 1 here, wave 2, wave 3 was an extended form, 1, 2, 3, 4, and 5. So you can be settled down here, sir. And let's move it on the right side. Let's make some space for Mr. 5 here. Sitting right at the top of all the lower degree waves, at least 3 lower degree waves below that structure and 1 above it. So it makes at least 5 degrees. A fifth wave terminating at 5 degrees. That is something if you believe what the charts are saying. In fact, an aggressive trade to go for our next peaks 500 would be like right away the stop below, stop above that high, which I've recommended here, partial shorts, 6035. Stop around 6200, 6230, just a 1% risk of the size of SPX, and target we are positioning around 58. So believe it or not, if this high it doesn't give in around 6140, if it doesn't give in, if it pulls, then bears would be seriously inclined to reverse very sharply from here. All right, and if it is 1, 2, 3, wave 4 flat here, then there will be one more high above. In that case, we are risking a stop loss. That's fine, but the structure would be one more high above 6150. That will complete 5 waves before the turn occurs, or before the reversal. All right, so those are the indices. VIX, I don't know VIX. Till the time it is above 14, I suppose we are good to remain. Yeah, it has not yet reached those levels. But the test has been quite deeper, much deeper. Bitcoin. It's been stalling on the wire, if you have noticed it. I don't know if it is because of this fundamental noise or trigger which is going to come, or is it the storm or silence before the storm. But I would keep humble, with all humility, I would keep this structure intact. For those who are long, I'm not saying you don't remain long. If you want to be long, please put your stop loss around 91. That is the bottom line. All right, sir. So we bring the session to a pause with that, and thank you once again for tuning in. I'll be back again in the New York session number 2, just after IT Trader. Back to you, Ego. Thank you so much.
Thank you very much, SPDas. Always a pleasure.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com. ForexLens gives you the edge. ForexLens understands the